Athene helps people save for and then convert that savings into a guaranteed paycheck for life. I mean, we are helping people live their retirement dreams.
Can you put that into context for people?
They give us their hard-earned money and they want to see that paycheck for the remainder of their life. So they're making a long-term commitment to us. We need to earn that trust and we need to be true to it every day.
Today, that's created almost $35 billion of capital backing the promises across our various channels. As you contextualize our balance sheet against our peers, what sets us apart?
We have a larger capital stack than any of the public companies that we compete against. We operate with lower leverage. From the very beginning, our concept has been if we had large amounts of capital and large amounts of liquidity, we could play offense in all market environments.
We talk a lot about our fortress balance sheet, but can you bring that concept to life a little bit?
Fortress balance sheet means a large amount of capital, access to more through having the largest equity sidecar in the industry, always having large amounts of liquidity, running with lower leverage than peers, always looking at everything we do through a risk management lens.
Our balance sheet is now north of $400 billion.
Yeah.
How do you feel about our liquidity profile?
These financial services companies get into trouble, not because they run out of capital, but they run out of access to cash. And so an extreme liquidity lens has always been a focus for Athene. Athene has $75 billion of total liquidity. None of that includes any private assets.
How do you feel about the resiliency of our balance sheet? So we're currently undergoing some market stress. We've seen some market stress in the past.
Athene is asset liability matched. So Athene would never be a forced seller of assets, let alone a forced seller of private assets.
The strength of having matched assets and liabilities and the inherent protection that provides.
We don't rely on the sale of private credit as a source of liquidity. Most recently on Liberation Day, for a very brief moment, credit spreads stepped out to levels that we thought were attractive. We deployed twice the amount of money that we would have normally put out in that period of time.
Grant, can you talk a bit about the importance of transparency? We're in the trust business.
We are in the trust business. We take very seriously that our first obligation is to meet every promise that we've made to policyholders. We are generally acknowledged by investors and regulators as really leading the industry on disclosure. We think the more people know about Athene, the better. We're the only company that publishes an annual forecast quarter by quarter of what we expect to lapse. When there were concerns about office properties, commercial real estate, we did a deep dive on that. When there were concerns about CLOs, we did a deep dive on that. We publish our stress test results annually.
So you've touched on transparency and really creating a lot of confidence because those expectations have been right on spot on the money for the last 3 years. Where else are we pushing the boundaries in a good way on transparency?
When we get requests from investors and we start to get multiple requests along a similar line, we think about how do we enhance our disclosures even more than we already have.
What role would you say the regulatory environment plays in the transparency journey?
I think our regulators are important partners, and we've always taken the view of they should never hear anything about Athene other than from Athene. Athene's number one priority is and always will be policyholder protection.
Drop the mic on that one, right?